This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Former President Donald Trump is safe after what the FBI is calling an apparent assassination attempt. The suspect is in custody and investigations are on. Pessimism over China's economy deepens, with data over the weekend showing factory output, consumption and investment for August all slowing more than forecast. And the week's big focus is on the Fed and the expected beginning of the rates easing cycle. Investors are also eyeing what the BOJ has up its sleeve.
We start with our top news. Former President Donald Trump safe after what the FBI is calling an apparent assassination attempt at his golf course in West Palm Beach, Florida. The person believed to be connected to the incident was taken into custody in a neighboring county.
We have somebody in custody right now that is a potential suspect. We got a little bit more work to do on it, but as we usually do, as soon as we decide that we're going to book him into the county jail and the charges that he's going to be booked into, we'll get those to you and we'll get a picture of him and we'll get you his background.
Let's get the latest from our managing editor for Weekend News in the Americas, John Edwards. And John, we heard it is really early in the investigation. But what do we know at this point?
Yeah, well, emerging right now is the identity of the apparent attempted shooter. Appears to be Ryan Routh, 58 years old, living in Hawaii. We're trying to find out more details about him right at this point. Apparently, he has a large social media presence that both media and, of course, investigators will be going through closely in the minutes and days ahead, but that is the suspect who is in custody in the incident that happened this afternoon in West Palm Beach.
You know, if this is being characterised as an apparent assassination attempt, it would be the second in as many months on Donald Trump. What are the implications when it comes to this last leg of the campaign and the security concerns here?
Yeah, I mean, it's, in some ways very hard to know exactly how this will play out politically, but certainly, heightens security concerns again after they were, of course, heightened by the incident in Butler, Pennsylvania in July. The president, the former president's security detail was heightened after that incident. We'll see if there are any further steps that are taken after this one. But of course, a lot of contrasts in this incident. Obviously, the Secret Service was able to stop and then later, with some local help, apprehend the suspect here. And so, this seems like much less of a security breakdown or security failure than the incident in Pennsylvania in July.
What can we take away from the Pennsylvania shooting incident when it comes to voter sentiment and the impact that it could potentially have on polls?
Yeah, I mean, that incident didn't really seem to move the polls very much one way or the other. And, there was perhaps a slight bump for Trump, but of course, superseded by the events of the following weekend when President Biden announced that he wouldn't seek re-election, and Kamala Harris quickly became the consensus choice for the Democrats. So that really upended the campaign a lot more than the assassination attempt did. Again, with the second one, we'll see what kind of impact there is from this one. In some ways, it's obviously less dramatic, given that no shots were fired at the president in this incident or the former president. But it's obviously a fluid situation, and we'll see what kind of political fallout there is.
We get into these final weeks before the November presidential election. Our managing editor for Weekend News in the Americas, John Edwards, there with us. And as we keep on top of those developments, Shery, of course, the other part of the focus is on central bank activity, right? We are counting down to the Fed. And, it's interesting. The central bank in the US really finds itself in a bit of a tricky situation when the markets are so split, not on the direction of their path, but the scale, the magnitude of what sort of cut we could expect, right? And to that end, we could actually see sort of disappointment regardless if they cut by 25 or 50 basis points. This is a 36-hour sort of rate rush that we're seeing. Of course, it is not just the Fed, it is also waiting on the Bank of England and the caution that we see there, signalling from the Bank of Japan as well, which, you know, to some extent has been a little bit confusing. So it feels, Shery, like there's quite a bit of event risk.
Yeah, it's really interesting how those bets on a potential 50 basis point cut from the Fed has really come alive. We're talking about Fed funds futures now pricing in a 70% chance, perhaps really spurred by media reports last week. We're in a Fed blackout period, but the fact that we got those reports that the Fed is really considering a 25 or 50 basis points has a lot of people speculating that perhaps they're sending some signals to financial journalists. But of course, as you said, it's a 36-hour window. We're expecting the BOJ to not do much at this meeting, but we'll be watching the Japanese yen very closely, because what does narrowing rate differentials means for that carry trade unwind that we got last time when the BOJ hiked rates, right? And also joining the BOJ on that tightening trend could be an emerging market central bank, the Bank of Brazil. Really interesting because they were ahead of the curve in tightening policy when inflation was high. They cut rates, and now they might be hiking rates again for the first time in more than 2 years.
Shery, I want to bring in Katrina, who's the Director of Economic Research at Moody's Analytics. Katrina, great to have you with us. And of course, we're setting up for this, you know, a bonanza of a week when it comes to central banks. How big is the risk for policy error right now?
Oh, it's a huge risk. And that's actually the number one error that could actually derail the global economy at the moment, because we've had this really aggressive tightening cycle. The global economy has performed much better than expected in the face of restrictive policy settings, and now is the time that we're seeing rates start to ease. But we need to be cognizant of the fact that it's going to take time for those easier monetary policy settings to actually manifest. And at the same time, we know that economies are underperforming, and you know the Fed really does stand out as one of those that if they do move too slowly, then that resilience in the US economy won't hang on indefinitely.
What are we not seeing when it comes to the data at the moment, right? Be it you talk about the Fed or the RBA, it feels like a very sort of fine balance that a lot of these scenarios are hinging on.
Oh, definitely. And I mean, the number one issue is that central banks, just like economists, are relying on this outdated data. We're looking at labour market data as such a key input into policy making, but we know that that's a lagged indicator. So when we're looking at the US, for instance, it's really important to take stock of what those forward indicators are saying. So data points like initial claims for unemployment benefits to tell us just how quickly the labour market is cooling. At this point, it's telling us that it's enjoying an orderly cooling, which is a positive thing. So there's no need to rush when it comes to, say, a more outsized rate cut like 50 basis points or even 75. It does tell us that 25 basis points is more appropriate at this stage, but there's a whole lot of uncertainty with how quickly we need to ease rates beyond this week's decision.
Katrina, given the uncertainty, is it possible that we might see a split committee? And if we do, what would be the implications of that for the next meeting?
Yeah, I think that's a really good question, and I think what we need to see from the Fed is some sort of, more unified message that, we do have some confidence in this easing cycle. If they can communicate with, closest to one voice as possible, I think that will start to ease some of the extreme volatility that we've seen in markets, because at the end of the day, there's a huge amount of anxiety riding on the Fed's easing cycle, and particularly the pace at which they're going to ease. So the more clarity in terms of communication that we can get from Fed members, I think it will be the much better, not just for financial market themselves, but also for sentiment in households and also businesses.
Talk about volatility. I mean, who can forget what happened to the yen carry trade after the BOJ hiked rates? And if we actually do see the BOJ holding with no change at this meeting as expected, but with hawkish rhetoric because it's been signaled so far, what would that mean for narrowing rate differentials and the trajectory of the dollar against the yen?
Oh, I think that's the million-dollar question at this point, and I think that the Bank of Japan is incredibly cognizant of that. So what we will see from the Bank of Japan, as you say, the short-term policy rate will of course hold steady, but I think the communication coming from the BOJ will be critical to let market participants know exactly as clear as they can be in what the next moves and what the particular timings of the next moves are going to be. Our base case is that we will see the BOJ hike again in October, but there is a lot of uncertainty around that, particularly given the domestic data is not incredibly supportive of, an aggressive withdrawal of this ultra-accommodative monetary stance. But I think what's important to remember is that while most developed economies are seeing restrictive monetary policy settings, in the Bank of Japan, they're not actually hiking into a restrictive territory. They're more just gradually withdrawing that ultra-accommodative stance. And we have seen more positive domestic data of late with the return of real wage growth. So while it's still a weak domestic picture, at least it's going to be a gradual withdrawal of that stimulus, which should actually see Japan perform better next year. This year, of course, does look like largely a write-off, with GDP growth coming in at around a negative 0.2% full-year contraction, but next year should look a lot better. And I think the Bank of Japan is really leaning into that and hoping that kind of less supportive policy stance will provide support to the yen, which it has so far.
Katrina, what's been really interesting about this cycle has been how emerging markets have led the way, whether it's hiking rates or cutting rates. Now we're seeing the Central Bank of Brazil getting ready to hike rates for the first time in more than 2 years because of an overheating economy. Is that a risk that other major economies could face if they cut and then we see inflation coming back?
Yeah, I think it's an interesting point. I mean, when we're looking at emerging markets in Asia, it's certainly a risk. I mean, food prices are particularly sticky, and we have seen food prices, be a concern for central banks, particularly here in Southeast Asia. But at this stage, while it is a risk, we do see it as more of a tail risk at this point. Heading into the meeting this week for Bank Indonesia, we do expect them to hold steady, and rather than focusing on so much inflation, they are really looking at rupiah stability and really prioritizing rupiah stability. So I think that will be more of a focus area, and particularly given that we are on the cusp of this Fed easing cycle, that dollar support and emerging market currency support should mean that central banks do have that space to ease in the next couple of months, which will provide support to domestic demand. But then at the same time, given that domestic demand across Southeast Asia isn't doing too badly, they don't need to rush when it comes to easing policy. So they do have that space if, say, inflation does surprise on the upside, or we do see a bit more dollar strength given the volatile period that we're in.
Katrina, our Director of Economic Research at Moody's Analytics, stays with us. And of course, the Fed is the big focus of this week's Big Take, with investors watching whether the central bank will be able to achieve a soft landing for the US economy. You can read the full story by crossing over to the Bloomberg. It's also on Bloomberg.com.
We're setting up for the market opens in Australia. We are seeing futures pointing to the upside of 0.2% after 2 sessions of gains. We're seeing U.S. futures really not doing much, but of course, after a week of gains, those bets that we could see an outsized 50 basis points rate cut by the Fed really being revived. That's sending yields down. That's sending the dollar down. On the other side of the trade, the Japanese yen has held steady, but right now at the highest in about a year. Of course, Japan is away on holidays. Take a look at some of the other Asian markets that are closed. South Korea away, China away, Indonesia away, Malaysia, Bangladesh, and Sri Lanka also away on holidays, Heidi.
And of course, so much implications when it comes to these emerging markets for the fate of China's economy, right, which decelerated further in August, putting the government's full-year growth target of around 5% further in jeopardy. For more, let's bring our Chief North Asia correspondent Stephen Engels. So we've already had a raft of downgrades in expectations. How bad was the actual data?
Well, the numbers missed across the board, analyst estimates. Essentially, factory output, there's anemic growth, obviously, in business sentiment. Retail sales also missed expectations. There's anemic growth in consumption, obviously. Fixed asset urban investment also missing. So the August numbers did very little to assuage the fears of economists who say more stimulus is needed. I'll get to that in just a bit, but you can see the China industrial production, basically factory output, decelerating for a fourth consecutive month. We have not seen this kind of deceleration for this many months in a row since September of 2021. Obviously, that's when the pandemic was raging. So things are tough right now, obviously, in the Chinese economy. This equals the weakest growth in factory output as well since July of last year. Retail sales, a big cornerstone of the Chinese economy is consumption, obviously, and it is anemic, no doubt. We've had low single-digit growth in retail sales for every month so far this year. Of course, March is a kind of a combined figure to count for the Lunar New Year holiday. There was a bit of a bump up then, but not much, as you can see. And then fixed asset urban investment, a year-to-date figure, it's been a ski slope downwards, obviously, as you can see. Again, reflecting the toolbox at the local level is also diminishing to get shovel-ready projects out and helping stimulate the economy. This is what Goldman Sachs, over the weekend, they are downgrading the outlook for a full-year growth target of around 5%. Goldman, in a new report, says, we believe the risk that China will miss the around 5% full-year GDP growth target is on the rise, and thus the urgency for more demand-side easing measures is also increasing. And there, essentially, as you can see on the right side of your screen, the prospects in the analyst community and the economist community, they're lowering their expectations for China. Their time is running out to hit that growth target.
Yeah, so tell us about that potential for more stimulus, because, yes, I mean, the calls are getting louder.
Yeah, what are they going to do? What indications have there been that they're going to do anything? Raymond Young over at ANZ Bank says there needs to be some sort of bazooka stimulus package. Well, so far, Xi Jinping and the top leadership have given no indication that they plan to do a big bang type of stimulus. Sure, there's been successive rate cuts for mortgages, but home prices fell at the fastest pace since 2014. Again, that weak consumer sentiment is obviously sort of entrenched. Deflation at the factory gate, at least, is also becoming more entrenched. I was up at the Shanghai Bund Summit, where former PBOC Governor Yi Gang, mentioned deflation was a big issue. And interestingly, I believe it was Friday, just on the heels of that weak consumer or credit data, the PBOC put out a statement, extremely rare, saying combating deflation is going to be a major priority. So what can they do? Well, again, we're not expecting necessarily a bazooka, but I said time is running short. There could be more triple R cuts. There could be more piecemeal rate cuts, especially when it comes to housing and mortgages. But again, there's the other thing. There could be an ad hoc budget revision like we got last year. That would help provinces spend. They're not spending right now. But we'll have to kind of see in the last 3 months, especially next month, we're going to get the third quarter GDP figures, and they're looking fairly anemic as well. 4.6, 4.7%. That's what we got in the second quarter, 4.7%. That's not going to push them across the line of around 5%.
Chief North Asia correspondent Stephen Engels there. And let's get some views now with Katrina Earl, Director of Economic Research at Moody's Analytics. And Katrina, thank you so much for patiently staying along with us. Do you think they need to do more, or do you think policymakers are comfortable missing that GDP target, given that we know so many elements of this is a structural slowdown?
So, yes, I do think they need to do more. And I think what we've seen so far with the stimulus measures is that they haven't hit the mark, right? They've continually not actually lived up to expectations. And I mean, the clearest example is they said, all right, we have a housing oversupply issue. We're telling local governments they need to buy up that oversupplied housing, and it's just, it continues to be an issue. We still have that oversupply. So it's been this continual hope that all right, we'll continue to release stimulus. Things should get better. But I think when we're looking at this year so far, it's just been a perennial disappointment across the board. And I think China has a sentiment problem, not just from...
Does fixing housing fix everything else in terms of the animal spirits?
I don't think so, because I think what we have is that it would certainly help, but at the same time, we still have these other issues. So we still have investors looking in at China, foreign investors looking at China, thinking it's not the same sort of growth driver it once was. Even if they do fix housing, it still doesn't create or address the sustainability problems related to housing. And I think, households, for instance, they're not spending not so much for the housing market alone, but also because employment prospects aren't great. We saw the unemployment rate tick a little bit higher in August. So if we can just fix housing, that's not going to fix the broader domestic demand issue that China's facing.
Yeah, and don't even mention youth unemployment, right? Katrina, so how much of a disconnect is there between what the national policymakers in China want to do and what the local provincial leaders want to do in order to stimulate growth in the economy? Are they following instructions from Beijing, and why is that not filtering through to consumers?
Yeah, I think that's the number one heart of a lot of the problems that it comes to. Stimulus is being announced, but then it's not actually following through and delivering the results as expected. And I think until households get more direct support, then we're still going to see, say, retail sales and more broadly domestic demand underperform in China. And I think what we saw from that August activity data was it's not just retail sales and it's not just private investment that's disappointing, it's also industrial production. And that's particularly concerning given that industrial production, we can look at that and say, all right, export, that important export channel that policymakers have put a lot of hope on to actually reach their growth target, that's also disappointing as well. So we really need to refocus at home, and we really need to improve that link between what central government is announcing and how local governments actually implement that policy, because there is that disconnect, as you say, and there's also not a lot of incentive for local governments to really pick up the slack, because they're carrying a lot of debt burdens in particular provinces as well, which is creating issues.
Katrina, always good to have you with us, Director of Economic Research at Moody's Analytics. We have more ahead on the Asia Trade. This is Bloomberg.
Coming up in the Asia Trade, we'll be discussing the latest Trump assassination attempt with Bloomberg political contributor Jeanne Zaino. And Standard Chartered joins us to discuss why investors should hedge against a potential for more volatility. The Fed easing cycle progresses. Plus, we'll be hearing from DBS Bank on why China's deepening slowdown is driving calls for bigger stimulus measures. This is Bloomberg.
Former President Donald Trump is safe and unharmed following a protective incident shortly before 2 p.m. on Sunday at Trump International Golf Club at West Palm Beach. The U.S. Secret Service personnel opened fire on a gunman located near the property line, and this matter is under investigation.
The U.S. Secret Service speaking after the apparent second assassination attempt against former President Donald Trump. Let's bring in Bloomberg political contributor Jeanne Zaino. She's also political science professor at Iona University. Jeanne, great to have you with us on this Sunday evening for you. I mean, seeing this level of political violence in the modern United States is really shocking. Please give us your reaction first to the latest news and also what you think will be the immediate implications.
Yeah, it is just a stunning turn of event. I think the number one question people are asking is 2 months after the president was the victim of an attempted assassination in Pennsylvania, how is it that somebody got an AK-47 within what the FBI said today is 400 to 500 yards of him on a golf course? So that is the number one question people have. I would reiterate what you said, shocking, stunning. Those are the words that come to mind. I am racking my brain to figure out if in American history we have had a candidate and former president who has been the victim of an attempted assassination, not once, but twice within 2 months on the campaign trail.
But Jeanne, you said it, given that we do have precedent, how did things really unfold the last time that this happened, and what were the implications for voting last time around?
Well, you know, we haven't seen something at this magnitude, at this level in the last several election cycles. We have seen attempts, but I do think in this particular case, it is going to change this election. Ballots go out this week in this election. President Trump is already had to take additional security measures. Just as an example, if you are a voter who wants to go learn more about Donald Trump by attending one of his rallies, he is now surrounded by ballistic glass so that an attempted assassin cannot penetrate that glass, which, you know, obviously changes the way in which he communicates with his audience. So changes like that mean changes for the campaign. You also have campaign staff who are very, very nervous about their own lives and, of course, the life of the candidate who's at the top of the ticket.
Jeanne, I do wonder, what does this speak to, I guess, the sort of dynamics in this election, right? And I feel like we have been kind of talking about the same sorts of dynamics for the last few years of the election cycle. Does it speak to the divisions, and does it also perhaps speak to, you know, a potential outsized reaction depending on what the election result is?
That I think is the fear. It's such an important question. You know, we have had very, very polarized American public over here. The rhetoric is very intense. There is a lot of violence used in the rhetoric. You see it on all sides, particularly given the advent of social media. So all that has combined to raise the number of threats. And as we look at what intelligence officials, security officials have been saying, we are experiencing an increased number of threats of political violence in this country. So much so, you had a group of intelligence officials come out just a few months ago and say we need additional steps taken to protect the lives of voters, the lives of candidates, the lives of poll workers. So that is where we are. I should reiterate, we don't know the motive of the man who has now been identified, who was caught. He did have a social media trail, talked a lot about Ukraine, for instance, but again, we don't know the motive. And we do know threats are internal, domestic, and external. The Trump campaign was briefed not more than a few days ago that the threats from Iran to retaliate against him and his allies have intensified as well. We also had a Pakistani man arrested in early August for attempting to find somebody to engage in assassination and violence. So there is a lot of threats, both foreign and domestic, to a level that I think most officials here in the security realm haven't seen in the last several election cycles.
We heard from Senator Lindsey Graham, who said that he'd spoken to the former President Trump, that he was found to be in good spirits after the incident. And of course, we know from the first assassination attempt just the powerful imagery, right, of him being ushered off the stage, the sort of defiance of the fist in the air, and just that sheer imagery. We know that this probably only serves to galvanize President Trump's supporters. How do you think this kind of plays into the broader psyche of how this last leg of this election cycle kind of runs, and how potentially we could also see the Democratic side response? We know that, you know, Kamala Harris has already responded saying that there is no place for violence in this democracy.
Yeah, that is what Kamala Harris, Joe Biden, Tim Walz have said. They should continue to say it. They should not play politics with an assassination attempt or violence of any kind. So I hope they do not do that. President Trump was able to fundraise off the last assassination attempt, but it's difficult to separate the amount of support he got from the assassination attempt and the fact that it happened, a mere hours before the RNC. So it's difficult to know where that money came from, but he did fundraise successfully in the hours after because his supporters were galvanized and really encouraged by the fact that he showed strength. He's already released a statement today with a link to a fundraising note saying that he is strong, he is healthy, he's going to move forward and nothing's going to stop him. So I do think in a really volatile election cycle, this is only going to engender more threats, unfortunately, of violence and more need to protect both our candidates, poll workers, and everybody working on the campaign trail. It's a very scary time to be in politics in the United States. And I never thought those were that was the phrase that I would utter.
And given the various threats that you talked about, given, of course, the obvious love of the former president for big crowds, and we know that the size of those crowds matter for Donald Trump, what are the real implications in terms of his movement and his campaigning going forward?
Yeah, we're going to have to see. After the Butler assassination attempt, he has gotten increased security. Certainly, he is almost at the level of a sitting vice president. I don't think we've had a former president or presidential candidate who has the amount of protection that Donald Trump has. That said, this happened again, so they may have to increase that further. I should underscore that by all reports, the security did a phenomenal job today. They identified the attempted assassination attempt, the rifle that was pointed towards the golf course. They exchanged gunfire. They tracked the person down in a car within an hour. So the security did work. But of course, it is a second attempted assassination. And so they may have to make additional steps. And it does impact the election. You've got a campaign and a candidate who are going to be out on the field and perhaps not feeling as safe as they should to engage with voters. And that is disgraceful when you're trying to run for office in a representative democracy. People have to have the ability to talk to, communicate with, exchange ideas with the candidates running. And if the former president can't do that, if the vice president can't do that because she is under threat, that is a problem for all voters. And so I think that's the fear most of us have.
Jeanne, this comes as sort of a pretty serious distraction when it comes to where we're at with this campaign. Prior to all this, how would you have assessed the prospects of each of the candidates? Because we are, of course, coming off the back of Donald Trump saying that he's probably not going to do another debate. Depending on your sort of views, it was a pretty disastrous outcome for him in that first presidential debate. Where do we go from here? And do you think Kamala Harris has sort of managed to maintain that post-convention bump that we saw?
Yeah, prior to this assassination attempt today, this campaign has been on a razor's edge. We've seen Kamala Harris recover support that Joe Biden had lost. But that said, in all of the swing states, they remain in a very tight race within a margin of error. So at this point, it's really a jump ball. It is anybody's game. They are campaigning almost nonstop at this point in these 7 swing states. In fact, today was one of the first days the former president had off. He also was taking off tomorrow, but hitting the campaign trail again in the swing states on Tuesday and Wednesday. And so I think it's going to be a furious race to the finish. And I would just reiterate, with early voting, ballots go out this week. People begin voting. So it's not as if we have, 50, 60 days until Election Day. People are starting to vote now. So again, it's a very tight race. And the best odds I can give you is it is anybody's race to win at this point. So any incident like this, any September, October, early November surprise can upend the election. It's stunning the way that we are seeing this play out, where we really have no prospect to say who's going to hold the White House come January, February of next year.
Jeanne, we'll be speaking to you plenty of times in the next few weeks. I'm sure Jeanne Zaino, Bloomberg political contributor, really appreciate you taking time to speak to us on your Sunday evening. Let's take a look at how we're setting up when it comes to Asian markets. Of course, a holiday quietened day with many major markets around the region not trading today. But Sydney futures looking sort of mildly positive, about 0.2% higher there. We're seeing New Zealand trading to the downside. We had some pretty sort of difficult economic data a little bit earlier. The services industry numbers contracting for a sixth straight month, so casting further gloom when it comes to Kiwi growth there, and S&P futures looking pretty flat at the moment. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. And Garf, it's a big week for central banks, but I just wanted to get the fact that we're not seeing sort of any really market reaction to the political chaos.
No, I mean it's a much less straightforward read across. Betting markets haven't really significantly moved, in the US during the day, especially not, in the wake of the reported attempt. So that leaves us, as Jeanne was saying, it's 50-50. The markets for something like this, they're going to wait to see if there is a political zeitgeist reaction, like if in the coming days this is seen as boosting one or the other candidate, having some sort of impact, then markets might react. I mean, we did see, but even then, we saw some reaction to the debate last week, but it wasn't huge. And for the moment, the other thing that's obviously in play is markets are much, much more focused on the Fed and whether it decides to go 25 basis points or 50 basis points with its first cut, and possibly even more importantly, what its language is, what its sense of the economy is.
And when it comes to those betting odds, it seems traders are pricing in more of a chance of an outsized 50 basis point cut.
Well, it's kind of 50-50. It's very interesting the way, so after the data last week showed some stickiness in inflation, the rates traders pretty much took a 50 basis point cut off the table from their point of view. Then we had a report in the Wall Street Journal citing some former Fed officials. We had Bill Dudley, the former Fed New York president, and a Bloomberg contributor saying that he saw the case for 50 basis points. Those comments were all couched from the point of view of those people were seeing 50 basis points as in many ways the more prudent course for the Fed to be sure they weren't cutting too little too late. But none of them said they were certain that would happen, or even that they were confident that would happen. So we're very much in a situation where I'd be surprised if we go much further in the market pricing than where we are, unless retail sales data, which we get Tuesday in the US, unless those come in very weak. We're going to go in with it being a bit of a guessing game, which is interesting because Powell mostly has preferred to make it pretty clear to markets going into meetings what he's likely to do. So to have a coin toss, the last coin toss I can remember was sort of back March last year when we had the regional banking crisis breaking out, and people were thinking that maybe the Fed wouldn't hike at all. They did hike, but it's that same sort of setup where it's clear sort of what the Fed should be doing based on the economy, which is it should be looking to reduce rates, and probably gradually if they stick to their own consensus, what seems to be the consensus building in the Fed speak. But then we have these apparent back channel chatter setting it up for a 50. So it makes for a very interesting week, even when it seems it's a done deal that the Fed is going to cut.
Garfield Reynolds, who leads our Markets Live Asia coverage here. More ahead on the Asia trade. This is Bloomberg. China has cancelled hundreds of flights and evacuated residents from some cities as it braces for typhoon Babinka, which is set to land this morning. For more, our China correspondent Min Min Lo joins us now. So how bad is the damage that we're bracing for?
Yeah, this is expected to be one of the worst or the worst typhoon that Shanghai has experienced since 1949, according to state TV. And this is the second typhoon in days that China is experiencing. We had Yagi that landed in southern China not too long ago, and now this typhoon is barreling towards Shanghai, towards the Yangtze River Delta. And it's very unfortunate timing because China is celebrating one of the few big national holidays that they have. It's a 3-day holiday celebrating the Mid-Autumn Festival, where traditionally families will travel back to their home provinces or take the opportunity to travel within the country. So economists have been watching this peak travel season very closely, hoping for any sign of consumption recovery. But obviously the typhoon is going to disrupt the holiday making plans of millions of Chinese. Shanghai had already activated the emergency response yesterday, so suspending railway, airports and ports. Already more than 600 flights had been cancelled so far, and it's going to hit the consumer stocks, which already had been hammered this year. Take a look at the screen. It's down, underperforming its peers, down 23% year to date so far. And I guess we'll have to wait until the end of the Mid-Autumn Festival to see what the travel passenger data will look like and how big of a hit it is to the tourism and entertainment related sectors.
Bloomberg China correspondent Min Lo there. And these are some of the other political stories that we're tracking around the world. Jordan's King Abdullah appointed Jafar Hassan as the new prime minister after the resignation of Bashar al-Qasami. This comes days after parliamentary elections in which the opposition Muslim Brotherhood made big gains on the back of anger over Israel's war in Gaza. The new government will need to accelerate IMF-guided reforms and rein in more than $50 billion in public debt. Israel's inflation accelerated more than expected in August as the war in Gaza strains the economy and pushes government spending higher. Prices rose 3.6% year-on-year last month, now well ahead of the country's official target. Analysts surveyed by Bloomberg had forecast the rate to hold steady. The Philippines has withdrawn its vessel from a South China Sea shoal that's recently been at the center of tensions with Beijing. The Coast Guard says the ship was compelled to return to port from Sabina Shoal due to bad weather, depleted supplies, and the need to evacuate personnel requiring medical care. We have more ahead on the Asia trade. This is Bloomberg.
The 4 members of the Polaris Dawn crew are back on Earth after successfully performing the first commercial spacewalk. Paul Allen has been following the story, and there was a lot of focus on the spacewalk. But what were they sort of hoping to achieve, and did they manage to get there?
Yeah, they did. I mean, a lot of focus on this was, of course, yes, it's a spacewalk first by private citizens. It was very exciting, looked like a joyride for a billionaire, but there was a lot of point to it as well. I mean, the old spacesuits that we're used to seeing in Vision of the International Space Station, they're really bulky, they're uncomfortable, they have design flaws. So the intention was proof of concept for that. And in that respect, it was a big success. The designer of them calls them a suit of armor made of fabric that becomes rigid when pressurized. The visor has a heads-up display. Chris Trigg of SpaceX, who led the design of this, says the goal is to make it feel as if you're going about your business wearing everyday clothes. So, yeah, a big tick for that. This mission also reached a peak altitude of 1,400 kilometers above Earth, so only the Apollo moon missions have gone further than that. And there was a whole range of other experiments as well, including laser-based testing of communications between that capsule and the Starlink fleet of satellites.
But really something that we're watching is that it was really a commercial spacewalk, right? So what does this really mean for future missions?
Yes, it was a commercial spacewalk, and it was funded by billionaire Jared Isaacman, and it did have the feel of a stunt. But this was just the first of 3 Polaris Dawn missions. The next one has a rather vaguely defined goal to expand the boundaries of human spaceflight missions. But Mission 3 is where it gets really interesting. That will be the first human crewed flight of Starship, which is that giant reusable rocket that SpaceX is currently testing. The next test launch of that's probably looking at November. And this time SpaceX would attempt to catch that enormous booster with the launch tower. The ultimate goal of all of this is to have a permanent settlement on Mars, and that gets us back to the suit design. they're going to need a lot of them. They're going to need to be scalable to fit every shape and size of human beings. So this is just the first step, or well, another small step on a long, long road to eventually reach Mars.
Bloomberg's Paul Allen there. And here are some of the other stories that we're watching in the corporate front. Bloomberg has learned that Temasek is nearing a deal to buy a significant minority stake in Blackstone-owned VFS Global, a transaction that could value the visa outsourcing and technology services firm at about $7 billion, including debt. Sources say Blackstone will remain the majority shareholder in BFS after the transaction, although negotiations are ongoing. Representatives for Blackstone and Temasek declined to comment. According to sources, AT&T and joint venture partner TPG are in talks to combine their DirecTV service with Dish, a deal that could create the largest pay TV provider in the U.S. The discussions between DirecTV and Dish parent EchoStar are in the early stages, although a merger of the two largest satellite TV providers would create a single company with about 20 million subscribers. A spokesperson for AT&T said the company doesn't comment on rumors or speculation. Bloomberg has learned LG Electronics selected banks for a potential IPO of its Indian unit that could raise as much as $1.5 billion. Sources say LG has tapped banks including Bank of America, Citigroup, JP Morgan, and Morgan Stanley. The IPO may happen as early as next year. The listing could value the business at about $13 billion. LG may file a prospectus as early as next month. And of course, a reminder that we have a few markets closed across Asia today: China, Japan, South Korea, Indonesia, Malaysia, Bangladesh, and Sri Lanka away on holidays. But we'll bring you the market opens in Sydney next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens.
And Shery, of course, this is really a central bank bonanza that we're setting up for. And it's very interesting. Even just overnight, we've seen these Fed expectations really shifting. It was looking pretty split as to whether we're going to get a 25 or a 50 basis point cut. But now it does look like the expectations are rising to towards 70% when it comes to expectations of the jumbo-sized cut. So I do wonder how much of this market is potentially setting up for disappointment. And of course, from where you are, there are huge implications for the yen and for the Bank of Japan.
Not a lot expected from the Bank of Japan this week, but expectations are for a rate hike when it comes to December. Of course, we have seen BOJ officials coming out and really emphasizing last week that a tightening, that rate hikes are still needed. But what a bonanza, as you said, because we are expecting other central banks also to come out, BOE, Bank of Brazil, among others.
It's a very, very busy week. And of course, we're contending with political uncertainty as well, with now a second reported assassination attempt in just about 2 months on the former president, Donald Trump. So we'll be getting more details on that. At the moment, though, we're not seeing that sort of market reaction responding too much of just the sort of political chaos aspect of what we're dealing with on this news flow. But take a look at how we're trading when it comes to the staggered open here in Australia. We do have a number of holidays for major markets, so pretty thin when it comes to regional liquidity today. We are seeing the S&P ASX 200, I should say, just coming online pretty flat at the moment. We have seen some volatility when it comes to these growth-sensitive stocks, China-sensitive stocks. The Aussie dollar holding pretty steady, 67.14. We did have some weakness for the greenback as these shifting Fed expectations continue to play out, and very much on the back foot when it comes to trading in New Zealand. We had the services and industry data out this morning showing a contraction for a 6th consecutive month. So this sort of thematic, Shery, of weakening economic data and then the sort of finger pointed to what the central bank can continue to do, really becoming one that's quite global this week.
Yeah, take a look at how U.S. futures are coming online. Not a lot of movement, but after gains all of last week. And of course, really a lot to do with expectations of what the Fed will do and expectations of that outsized 50 basis point rate cut, really leading to Treasury yields to fall, the 2-year yield below that 360 level. With that, we have the dollar also pressured. On the other side of the trade, we have the Japanese yen being boosted to 2024 highs. And of course, we continue to watch what the BOJ will do this week. Not a lot expected from BOJ officials, but a potential rate hike to come in December is a calculation right now by economists, and of course, a narrowing rate differentials. And what that will do to the yen carry trade is the big question. We're watching, of course, also oil prices. We saw the first weekly gain in about a month. Right now, Brent price is above that $71 a barrel. But really, it is the economic growth expectations, the demand expectations that's really playing into the oil markets as well. A lot to do with China, but take a look at all of these markets that are closed, including China, including Japan, South Korea. Really, we will be watching really the weakness that we continue to see in the Chinese economy and how that will filter through when the Chinese markets actually open. We do have Indonesia, Malaysia, Bangladesh, Sri Lanka also closed, so perhaps some thin trading today. Our next guest thinks investors should be prepared for more volatility as the Fed's policy easing kicks off. Steve Brice, Group CIO at Standard Chartered Wealth Management, joins us now. Steve, great to have you with us. So, I mean, there's so many things developing this week alone. What will be your key focus in trying to gauge where markets go from here, other than obviously the Fed?
Well, I guess it's the combination of the Fed and the Bank of Japan is going to be the key focus for us. Obviously, a lot of the chatter is around the 25 versus 50. I think the key there is going to be the forward messaging, regardless of what they do. So do they go 50 basis points and hawkish, or 25 basis points and dovish? And I think, you know, our view is they'll probably go in the latter camp, so 25 basis points and dovish. So from our perspective, we think that's going to lead to you know, a little bit of volatility. Because obviously, as you mentioned in the intro, the Fed has been moving towards, you know, sort of former Fed members have sort of started signaling maybe 50 is more likely, and that's affected market pricing. But I think the Bank of Japan is being underplayed. Obviously, nothing expected this week, but the messaging out of that's going to be important. We've seen some hawkishness come out from BOJ officials last week, so you know that. Narrowing differential, we think is going to put downward pressure on the yen crosses. So euro yen is an area that we think is going to break below the August lows, and that could create some volatility in markets alongside obviously the political cycle in the US.
Given the rate differentials narrative that you're talking about, though, is dollar weakness a given right now, or could we see some volatility on that front, especially longer term, if we continue to see a stronger economic standing for the U.S.?
Yeah, it's a good question, actually, because obviously you're looking at dollar yen and saying, obviously, if we think dollar yen's going to go down, that's a weaker dollar. But you know, we still have the dollar smile narrative as well. And if the yen is strengthening, not just on interest rate differentials, but also on increased market volatility and a risk off, the dollar actually could be supported by there. So, you know, we're looking at the dollar and the 10-year yield in the US. We do see them as generally being on the you know, lower end of recent extremes. So they're at really critical levels now. So would we be selling the dollar on a more broader basis versus the euro versus the Aussie, etc.? I'm not sure we would, because we think this could be a risk-off environment which will support both the dollar and the yen, but the yen a relative gainer.
Steve, I think it's interesting, perhaps unsurprising, that we've not seen a huge market reaction or any market reaction at all to the latest political developments in the US. Do you expect this to change as we get closer to November?
I think it is, because obviously it's, you know, the closer it gets, the more contentious it gets, and therefore I think the more narrative we're going to get from both candidates that could upset markets as people. I mean, obviously former President Trump will probably double down on some of his narrative just to try and get swing voters back to him. So I think from that perspective, it is going to be highly uncertain. Usually after the election, things calm down a bit. But in the run-up to the election, we think that's going to create some significant volatility. Obviously, the developments over the weekend with a potential assassination attempt, it's going to be interesting to see how that affects the polls. Obviously, former President Trump got a bump last time. Will that happen again? After obviously the debate last week helped Harris's cause quite significantly.
Steve, when it comes to China, in a lot of ways, also unsurprising that the data over the weekend didn't sort of, change the narrative that we are going to see a miss on the headline GDP. How do you trade around this weakness? Do you have expectations that policymakers are going to be able to change the trajectory as we get into the end of the year?
So from an economic perspective, we're still fairly cautious on the outlook. I think the most telling data actually last week for me was the import data, which obviously saw that 0.5% year-on-year increase. So very lackluster domestic demand. That's been the story that we've seen for quite some time now. And yes, the authorities have been easing policy. They're talking about doing more, and we expect them to do more. But they are also trying to balance off these deflation, slow growth fears with excessive debt creation. And if you look at it, the debt creation, while it's been slowing, it's still faster than nominal GDP growth. So the debt to GDP ratio is still climbing. So I think that's the challenge that they're facing. I don't think anybody has an easy solution to this problem. But that probably means from an equity market perspective, while we could see some short-term bounces from oversold conditions, the longer-term outlook is fairly benign. We don't think that China equities are going to outperform within Asia or within the global context for some time to come, at least on a sustained basis.
Is a renminbi carry trade unwind, a sharp one like the one that we saw with the yen, still a possibility?
It is, but I think from our perspective, again, if we see the left-hand side of the dollar smile, so the dollar bounces on risk aversion, you could see people saying, okay, the cheap funding costs you can get in China is still pretty attractive. So probably we would see, if on the balance of risks, we'd probably say dollar renminbi is probably going to stabilize and bounce from here.
Steve, always great to chat with you. Steve Brice, the Group CIO at Standard Chartered Wealth Management. The former US President Donald Trump is safe after what the FBI is calling an apparent assassination attempt on his golf course in West Palm Beach, Florida. The person believed to be connected to the incident was taken into custody in a neighboring county.
We have somebody in custody right now that is a potential suspect. We got a little bit more work to do on it, but as we usually do, as soon as we decide that we're going to book him into the county jail and the charges that he's going to be booked into, we'll get those to you and we'll get a picture of him and we'll get you his background.
Let's bring up Bloomberg Political News Director Jody Schneider with us now. And Jody, Shery and I were just talking a little bit earlier. These are just extraordinary and really quite worrisome political times that we're in now, right, as we get closer and closer to the November election day. What do you make of this, given that this is now the second apparent assassination attempt on Trump's life in as many months?
Yeah, that's right, Heidi. This Donald Trump, of course, was shot in another assassination attempt on July 13th, just before the Republican convention in Milwaukee. And in that case, there was a shooter there. Several people were wounded and one killed. Tonight, at least, there's a situation where no one was hurt. The former president was about 300 to 500 yards away, though, from where the shooter was allegedly outside the golf course. So it's close. And of course, this is very worrisome. We've heard in this case that the Secret Service, according to the Palm Beach County Police, the county where this occurred, did a good job, did a fantastic job, actually. It was the quote from the sheriff. In the case in Pennsylvania, of course, there was great criticism of what had occurred from the Secret Service, and the Secret Service director was forced to resign in that case. So we have a different situation with the Secret Service. Obviously, we have an investigation going on. How was he able to get that close, the alleged assailant, and how did he have knowledge of where the president was at that time, the former president was at that time, where he was golfing and where on the course he was, of course, is another question to be answered.
Jody, of course, we have heard that the White House has been informed. We have seen the reaction right now. We're seeing Vice President Kamala Harris tweeting on X that she has been briefed on reports of gunshots fired near former President Trump. She's glad that he's safe. Violence has no place in America, she says in that post. What are the implications of this latest potential assassination attempt on Donald Trump for the November vote?
Yeah, I'm not sure that in the long run, Shery, it will matter that much. We seem to be in one of these speeded up news cycles where things are happening very quickly, and by next week we could, have a whole different storyline. But of course, right now it changes the narrative from what had been post-debate narrative and a lot of talk about Donald Trump and some of the things he was saying about migrants. And the things that had been said on the Sunday morning talk shows this morning have now been swept away by this latest attempted assassination of him and how it's being handled. So we seem to be in one of those news cycles where every few days there's something else. So I'm not sure there'll be major implications. I don't think we'll see the former president nor his running mate, who are staunch defenders of the Second Amendment for gun ownership, to change their stance much. We have not yet heard from Donald Trump. Certainly he will, I'm sure we will hear from him about this. We've heard quite a bit from him about the initial assassination attempt in July and how he, how worrisome he found that, but also how it made him, appreciate his supporters that much more. And I assume we'll be hearing that same kind of thing from him in this case.
Jody, we know how important these campaign rallies and the size of those crowds are for the former president. Are there any meaningful implications for his movement and how he carries out the campaign going forward?
That's a good question. He enjoys the rallies. He kind of relishes them. We haven't seen him in as many rallies, certainly since the July 13th assassination attempt, but he does like to get out there. He's made it very clear he wants to be out there among people. So we will have to see. We'll also have to see what the results of any investigation are, how the shooter was to get so close and to have knowledge of the former president's movements.
Bloomberg Political News Director Jody Schneider there. We have more ahead on the Asia trade. This is Bloomberg. The Fed will begin a crucial pivot this week, lowering rates for the first time in more than 4 years as it pursues a rare soft landing for the U.S. economy. Investors are focused on what happens next. Immediately after the announcement on Thursday, our news desk editor Jill Deasy's joins us for more on today's Big Take. But Jill, let me get started with the big question, of course, is not the fact that the Fed is easing, but by how much. And Fed funds futures now have increased those odds of an outsized 50 basis points cut to about 70%. Why?
Yeah, that's right. So look, I think at this point, investors certainly are all jittery about this possibility that there could be, a bigger cut here. The big thing here, Shery, is that, there's some worry about whether or not the Fed is already behind on kind of, already starting this cycle of cuts. This is, obviously not, we've kind of moved off of the inflation story a little bit. I think inflation has been about 2.5% in the year through June. Certainly have seen a substantial cooling off there from where we were just about a year or so ago. But really, I think at this point, the concern has pivoted a lot more toward the labor market, whether we're seeing, sort of that uptick in unemployment, rises in jobless claims, whether that's actually impacting the Fed's ability to kind of pull off what, a lot of economists are hoping for, a soft landing here. Now, I will say, Shery, that at this point, the consensus among most economists is still that it's going to be a 25 basis point cut. But as you just implied there, we did see, bond market last week piling into this idea that it could be a 50 basis point cut. And actually, JP Morgan has clocked a 50 basis point cut as well. So still a lot of uncertainty here to kind of sift through as we wait for Thursday.
Uncertainty, and yet, could this be more about the dot plot revisions?
Yeah, I think that's the other thing that investors certainly are really looking at for here. I mean, first of all, we'll have, an answer on Thursday about whether this is 50 or 25 basis points that we're seeing. But then, yes, I mean, we're also getting these revisions to this dot plot. This is, where we expect, while it's anonymous, where, all these central bankers are really expecting cuts to hit, over the next several years. I think it's through 2027, what they, look at that rate being. And I think given the timing of this, I mean, we're, just about to kick off, this new easing cycle. What the dot plot will show us ultimately is where, the Fed really thinks things are going to go in November, December, by the end of the year. If there's not a 50 basis point cut this time around in September, that dot plot could show us whether they expect an outsized cut in the November or December meeting. So it's really, really being looked at very, very closely here, just to kind of see, for clues on what the pace of those cuts are going to look like and where that's ultimately going to take us with the federal funds rate by the end of the year.
But Jill, I said it earlier, but soft landings are pretty rare, aren't they? So can the Fed still pull it off?
Yes, that's right. I mean, I think, by some measures, the only time that the Fed has really pulled off a soft landing, a clear soft landing, was in the 90s. It's really, really difficult to actually kind of make all of these happen in succession. I think the other thing, too, is that a lot of economists are actually, quite surprised at, some ways in which we've seen, inflation come down over the last couple of years. But also, earlier this year, certainly there was a lot of surprise over some resilience in the labor market that we were seeing. I think, economic data lately has been pretty mixed, and so has kind of showed us a different story in terms of, some concerns rising about how the labor market is doing. But yes, I mean, that's really the big question here today. Is, as the Fed kind of begins this easing cycle, are they able to actually balance things to the point where we don't steer into a really, large economic downturn?
Our news desk editor Jill Desis there, and you can read the full story of today's big take by crossing over to the terminal. It's also on Bloomberg.com. More ahead on the Asia trade. This is Bloomberg.
China has cancelled hundreds of flights and evacuated residents from some cities as it braces for Typhoon Bebinca, which is set to land this morning. For more, our China correspondent Min Min Lo joins us with the latest. So, Min Min, how bad is the damage we're expecting?
Yeah, this is expected to be the worst typhoon that Shanghai has experienced since 1949. And it comes just about a week after Typhoon Yagi had made landfall in southern China, disrupting, farmland and industrial activity. And now this is coming in the midst of the Mid-Autumn Festival. It's a 3-day public holiday that's expected to be a peak travel season for millions of Chinese. But now over 600 flights have already been cancelled. You have the amusement parks like Disneyland suspended temporarily as well. So people are going to be huddling at home. It's going to hit the dining sector, retail sales. Economists were expecting these 3-day holiday to be a boost for China's consumption sector. But again, you've seen that weak activity data in August. This is going to be hitting the September data as well. We have to wait until Wednesday after the holidays to see what officials announce the passenger and travel data to be after the holidays. But certainly it's going to be not very good for the economy that's already suffering a lot right now, especially with the consumer stocks. You see that it's lagging behind its peers, down 23% year to date compared to the CSI 300, which is also down about 8%, I believe, year to date so far.
Bloomberg's China correspondent Min Min Lo there. Let's take a look at some of the political stories that we're tracking from around the world. The Philippines has withdrawn its vessel from a South China Sea shoal that's recently been at the centre of tensions with Beijing. The Coast Guard says the ship was compelled to return to port from Sabina Shoal due to bad weather, depleted supplies and the need to evacuate personnel requiring medical care. Jordan's King Abdullah appointed Jafar Hassan as the new Prime Minister after the resignation of Bishr al-Kaswani. This comes days after parliamentary elections in which the opposition Muslim Brotherhood made big gains on the back of anger over Israel's war in Gaza. The new government will need to accelerate IMF-guided reforms and rein in more than $50 billion in public debt. Israel's inflation accelerated more than expected in August as the war in Gaza strains the economy and pushes government spending higher. Prices rose 3.6% year-on-year last month, now well ahead of the country's official target. Analysts surveyed by Bloomberg had forecast the rate to hold steady. Shery.
And Heidi, take a look at how futures in Europe are opening in the Asian session. This, of course, as we head towards big central bank decisions, including a few in Europe, including from Norway and the BOE. We're expecting the BOE not to move this time around, but we'll be watching the unwind of their bond portfolio. It really confronts a year of unusually high bond redemption. So this is going to be key in that Bank of England decision. And you're looking at futures sort of pointing to the upside. This already after really that big gain last week. We're talking about the best week in about a month. And the sectors that led those gains were retail and automotive as well. But of course, one of those sectors that has been battered across Europe has been the luxury sector, given that China's economy doesn't look too great. So we have those economic numbers out of China. We'll be watching for any moves from the PBOC. Take a look at how we're setting up across the Asian session when it comes to those currencies. The Chinese yuan right now holding steady at that 7 level, but we'll be watching, of course, the Japanese yen, because it's that narrowing rate differential narrative that's really playing into yen strength at the highest levels this year. We haven't been at around this 140 level since December of last year. And as we constantly get this rhetoric from BOJ officials all of last week that they're in that tightening mode still, that rate hikes are still needed, and the Fed, of course, ready to cut for the first time in years this week, we'll continue to watch those carry trade unwinds and the possibility of volatility in the currency space. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching when it comes to a pretty cautious and really holiday-themed start to the trading week here in Asia. We are seeing a little bit of upside when it comes to trading in Australia, up by just about 0.5%. We're about 30 minutes into the start of cash trading there. Weakness, though, when it comes to some of the trading elements that we're seeing in New Zealand as well. Some data suggesting that certainly services components of the economy's really seeing a stretch of contraction now going into 6 straight months. S&P futures looking pretty flat at the moment. Really a pretty directionless start to the session. Traders globally really weighing the extent of slack in China's economy as well. We had that poorer than expected, even on the low consensus expectations. The domestic activity data that came in over the weekend disappointed, and of course a big week of event risk with the Fed and other central bank goings on as well. Let's get back to China though, because the economy did lose momentum in August. Activity cooled across the board, pointing to mounting risks to achieving the government's annual growth target. Measures of factory output, consumption, investment all slowed more than economists had forecast. The broad weakening darkened the growth outlook, fueling calls for more aggressive policy responses. Joining us now is Moody, who is a chief China and Hong Kong economist at DBS Bank. Really great to have you with us. So, even before this, we had a raft of downgrades of expectations when it comes to Chinese GDP growth this year. Consensus seems to be building that the government will not meet that 5% target. Do you think this propels policymakers to go bigger for stimulus, or do you think there's an extent of the mindset that they're sort of comfortable with a level of slower growth, given that a lot of the elements are structural?
I think the government, they tries hard to try to stimulate the economy. But the key problem is the demand in China overall is very sluggish. So in the next several months, what the government needs to do, not only for monetary, but especially for fiscal, they have to ease much more to try to stabilize the economy and try to meet that 5% target.
The problem front and centre is the housing market, right? Do you think if they were to do more in terms of more try and instill more confidence in terms of this housing recovery, go for more of a big bang stimulus measure, then that would have the trickle-on effect of boosting confidence, because we know so many sectors, not to mention household wealth, is tied up with property values?
I think fundamentally, in our view, for 2024, back in 2023, we have been arguing there are two most important risks facing China. One is unfinished homes. That's something the government has already been doing. But the second and most important is how to do the destocking of the, of the inventory. So far, we see China at the peak. The inventory, it needs 31.9 months to declare. But the thing is, currently it's going down, but still at 27.9 months, meaning they need 27.9 months to destock all the inventory. So this is the overall the biggest drag for the whole economy. As long as China, in terms of property, is bottoming, the whole economy can bottoming. But so far, until this year, next year, it wouldn't be the bottom.
So is what you're saying that Beijing is actually comfortable with carrying out these destocking, these deleveraging of the economy, and that they will continue on this path despite the fact that we are seeing this growing weakness with different data points coming out of the Chinese economy?
They are trying very hard. If you remember, back in May, they are doing the re-lending to state banks doing that to SOE, and SOE try to help to destocking the over-inventory. But it only comes down to 27. What the government need at least has to go to 18. But so far, we see the destocking is very uneven, spread across all the different provinces. The good news is we see Shanghai, the inventory now is only 10 months. It's less than a year. And among all the fixed asset investments, we see the fixed asset investment in China is not only in low single digit, 3.4%. So comparing to 15 years ago, it's around 20%. But among all of this, we see the property investment is now at minus 10.2%. But where do you see Shanghai in terms of property investment? That's the only big city is at 8% growth. So this is where we see some of the sign of the initial recovery, but it takes time to solve the overall the over inventory in the property sector.
So are we going to see any moves coming from Beijing in the meantime to mitigate the economic hardships right now, whether it's from the PBOC side of things with more easing, triple R cuts, rate cuts, and more fiscal stimulus? Or are they going to just let things be so the economy can also go through those structural changes?
I think for PBOC, as Fed, ECB is easing, they already eased, and Fed is going to ease. We expect PBOC will ease another 10 basis points of the benchmark rate cut, but also one triple R is also in the pipeline. But I think what's most importantly is not really in the price, but also in terms of the quantity, how much bigger the money they need to spend in the system. But in terms of fiscal, we already see in terms of the bond issuance is already very high. It's even higher than the COVID time. But the thing is, the demand is weak. No matter how much money you spend, it wouldn't really turn the demand. You still see over the weekend, and one growth rate is at minus 7.3%. This is one of the worst. So historically, meaning people doesn't want to spend, meaning there's no capital expansion intensity. That means the overall the profit, the earnings cannot be reflected in the index performance. So this is why to really stimulate the demand is one of the most important things for the government to do.
How much focus are you sort of assigning to the outcome of the US election and the implications for that trade relationship, potentially further restrictions and tariffs on the Chinese economy? Do you think that will have a meaningful impact?
I think this is kind of market already priced in, and also even for the Chinese government, they have experienced in the past 5 years about how this decoupling is happening. When this decoupling is happening, China now is re-engaging with all ex-US economies, especially now China's trade with ASEAN, with Europe, is already the share is already, each of them is 15%. So they are the biggest two trading partners with China. China is still engaging with all other economies, try to solve the problem. But if you see another trend, it's very interesting. Even though China's kind of decoupling is happening, but China's trade surplus actually is increasing. So this is why throughout the whole year, what really surprised to the upside or lift the Chinese economy is China's trade data. The trade data in August is up 8.7%, and year to date it's good. So this means it's not only about the base effect, the front loading because of potential tariff, or the electronic cycle is bottoming. I think this overall shows China's trade is relatively resilient. If you really see the breakdown, you see, in terms of the electronics, is up 22%. Automobile exports up 20%. The machinery and also the home appliance, all up, about 10%. This is structural change. China is becoming even bigger and stronger in manufacturing, outputs in terms of the exports.
Moody, good to have you with us, Chief China and Hong Kong economist at DBS Bank. We have more on the Asia trade. This is Bloomberg. You're watching the Asia trade. A reminder that markets are shut in Asia today. We're talking about China, Japan, South Korea, Indonesia, Malaysia, Bangladesh, and Sri Lanka. We, of course, have Sydney continue to trade, as well as New Zealand. But Haidi, of course, will continue to watch the Japanese yen as it strengthens towards that 140 level against the dollar.
And continue to watch this story on 7-Eleven, right, as we've been following very closely out of Tokyo. We're now hearing, Shery, that the Japanese government has included 7&I to the list of core designated companies, adding another hurdle to Alimentation Couche-Tard's takeover plans for the convenience store operator. Let's bring our global business editor, Karen Lee. It's fascinating, isn't it? Because at the same time, a lot of the latest developments seem to make this about shareholder value and extracting shareholder value. And concurrently, we're now seeing that designation. So does this complicate matters?
It absolutely does. And this is going to be really interesting. We've obviously been watching every single step of this deal, one of the most watched deals in our orbit, I would say. And let's look at what this designation means. So the Japanese government saying this is now a core company. And let me look at what that means, Haidi. The new category requires any foreign entity to give prior notification of share purchases in a core company of more than 10%. So 7&I is saying that it's core because unlike in other parts of the world, in a lot of countries like Japan and Asia, 7-Eleven provides basic services, and that's not something that you tend to see in the U.S. So I think for people outside of the region, they might not understand why that designation was given, but for people in Japan and for people watching this, that is something that they'll understand. And this comes after 7&I just pushed back on Couche-Tard's initial proposal, telling 7&I some days ago it wants to work together to agree on a friendly takeover. So this is nowhere near done, and we're going to be watching every development.
Yeah, and it's interesting because the wariness when it comes to this approach, the potential implication if it was to be pushed back, it also has huge ramifications for, I guess, the credibility of all the activism investment efforts that have taken place in Japan.
Absolutely, and needless to say, this is a huge deal. This would be the biggest foreign takeover of a Japanese company ever. So this is something that's being watched very closely. And this would merge the operator of 7-Eleven stores with the Canadian operator of Circle K stores, and it would ostensibly create a convenience store behemoth, as we've been saying. But investors have worried that 7&I is being undervalued, as you were just talking about. This new designation will just likely add to those challenges that we've seen. So we're going to continue to watch this. This is really one of the most watched potential deals, not just in Japan, not just in Asia, but in the consumer space right now.
Global business editor Karen Lee there. And Shery, watching a few other corporate headlines at the moment as well.
Yeah, we are now hearing, according to sources, that AT&T and joint venture partner TPG are in talks to combine their DirecTV service with Dish, a deal that could create the largest pay TV provider in the U.S. The discussions between DirecTV and Dish parent EchoStar are in the early stages, although a merger of the two largest satellite TV providers would create a single company with about 20 million subscribers. A spokesperson for AT&T said the company doesn't comment on rumors or speculation. Bloomberg has learned that LG Electronics selected banks for a potential IPO of its Indian unit that could raise as much as $1.5 billion. Sources say LG has tapped banks including Bank of America, Citigroup, JP Morgan, and Morgan Stanley. The IPO may happen as early as next year. The listing could value the business at about $13 billion. LG may file a prospectus as early as next month. Bloomberg has learned that Temasek is nearing a deal to buy a significant minority stake in Blackstone-owned VFS Global, a transaction that could value the visa outsourcing and technology services firm at about $7 billion, including debt. Sources say Blackstone will remain the majority shareholder in VFS after the transaction, although negotiations are ongoing. Representatives for Blackstone and Temasek declined to comment. A new skyscraper in Hong Kong called the Henderson is struggling to fill its office spaces, highlighting the deepening property pain in the city. Bloomberg's Min Lo has more.
It's the newest addition to Hong Kong's iconic skyline. And its flagship tenant, Christie's, will soon open its doors to the auction house's new APAC headquarters, taking up 4 floors of the Henderson building, which soft launched in June. But as of May, this brand new office tower was still 40% vacant. Henderson Land declined to provide the latest occupancy rate. It's a situation that reflects the deep slump in Hong Kong's commercial real estate sector.
Vacancy, unfortunately, continues to go up. This is a big hurdle, the biggest hurdle for major landlords in the market. We are currently talking about 17% vacancy rate, and this is a new record high for Hong Kong. We have about 15 million square feet of vacant space in the market. This is a massive number.
That's about 260 football fields that analysts say will take 6 to 7 years to be absorbed. As office vacancy hits record high, sources are saying Hong Kong's landlords are resorting to paying agents fat commissions worth 2 to 3 months' rent to fill up spaces, up from just 1 month several years ago.
Walk around Causeway Bay and you get a sense of the commercial property downtown here in Hong Kong. This was once the world's most expensive shopping district. But if you take a look at Hysan Place, the luxury shopping and office centre owned by Causeway Bay's largest landlord, Hysan Development, and you find that the shops are still there, but not necessarily the crowds.
Weak demand has driven down rental values by as much as a third from the peak of 2019. But a spate of new office developments slated to enter the market will exacerbate the supply-demand mismatch. This a result of the long time lag between investments made during the bull run of 2017 and 2018 and the multi-year construction cycle that would see these projects come into fruition when market conditions have already worsened.
Between now and the end of 2028, for example, these 5 years, we expect to see another 8.5 million square feet of new space that would come into the supply pipelines. Put it short, I don't see a very good chance that the market will back to normal before the end of this decade.
The Hong Kong government has paused commercial land sales for 4 straight quarters, hoping that would help clear existing inventory before new supply is introduced. While that's helpful for the sector, CBRE expects rental values to continue falling by 5 to 6% this year. Meanwhile, a pause in land sales is already crimping on one of the most important sources of government revenue that has helped enable Hong Kong's low-tax system that is crucial to its business hub status. Min Lo, Bloomberg News.
You can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or the Bloomberg functions we talk about, plus become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Do check it out. It is at TV Go. This is Bloomberg. And of course, it's quite a start for markets, Shery, as we have, of course, a number of markets closed on account of holidays. But it is going to be a busy, busy week, no doubt about it. So much focus on central banks, particularly it's a big one, right? It's the Fed. And as you said earlier, this is not about the direction of travel for the Fed. This is about the magnitude and the scale of what we expect. It's interesting, even as we're in that blackout period, we're not expecting to hear, of course, any actual commentary, but whether that sort of, leaked messaging or expectations might kind of massage the messaging before we get to that Fed decision is something that we're certainly watching up with. And it's very interesting, I think, that we see even just over the course of the weekend, the Fed expectations when it comes to whether it's 25 or 50, really pushing closer towards 50 at about 70% when you take a look at Fed funds futures. Where that expectation is coming from, is it going to set up then for disappointment for a large part of the market? And where that dot plot kind of suggests the future path of travel is all these things that we're watching out for. And of course, big implications for some of the other central banks that we're watching around the world as well.
Yeah, it was really interesting how Bloomberg Economics put the Federal Reserve in a potential 50 basis point cut, because they're saying that the summary of economic projections is only consistent if you have a 50 basis point cut, because that would assume that the unemployment rate wouldn't go further up than 4.2%. But of course, really the direction of travel seems to be clearer, as you said, for the Fed. Also, it seems to be clear for the Bank of Japan. We're talking about, of course, more hikes to come, as it's been choreographed by BOJ officials all of last week. The expectation is not for any move this week around, but more than half of the economists surveyed now expect that we could see that rate hike coming from the Bank of Japan in December. What the implications are for the Japanese yen, of course, is a key question, because we're now seeing right now the Japanese equity markets closed, but the yen really traveling towards that 140 against the US dollar and strengthening already.
We're also watching the BOE as well, right? We talked about it was a busy week, but of course the BOE, we're seeing UK households really seeing this big turn in expectations. They're expecting rate cuts for the first time now since 2008. The confidence in the BOE has also recovered as well. And, it is not just about the sort of possibility of policy error at this point, as we spoke to Katrina from Moody's earlier, saying that this is the biggest risk that we're looking out for, but it's also for credibility and the confidence that consumers have, right? We're seeing sort of inflation easing. Britain's now expecting interest rates to fall for the first time in just about 16 years, with this recent inflation attitude survey seeing 38% of respondents expect rates to come down in the next 12 months. So that's a pretty big shift when it comes to public sentiment. And this sort of just came after the BOE cut their rates for the first time since the pandemic in early 2020. So in that early August period. So we are setting up expectations going into this meeting as well. And of course, Shery, what happens with the Fed, what happens with global central banks, the direction of the dollar really has big, implications for what we see with emerging markets as well, including the likes of Brazil.
Yeah, we'll be really watching what happens with Brazil and the Brazilian real, given that really we are expecting that big shift to come from Brazil as well. For the first time in more than 2 years, the Central Bank of Brazil is expected to not cut, but hike rates. We know that this central bank has been really out of step with major central banks, right? I mean, they were really aggressively tightening when they felt that inflation was surging, and then they really led the way in the easing cycle as well. Well, it's only been about 3 meetings after the last rate cut, and already they're expected to raise the rate again for the first time in 2 years. Their economy seems to be overheating. We're seeing above target inflation, also large fiscal spending. So last week, their government raised their 2024 growth and inflation forecast. So really, the fiscal question is also a big issue around the world, right? As we head, of course, towards the U.S. elections as well. But take a look at what's happening in the currency space. As I mentioned earlier, the Japanese yen continues to strengthen against the U.S. dollar towards that 140 level. We're talking about levels that we haven't seen this year. We haven't seen since December of 2023, and we'll continue to watch that narrowing rate differential when it comes to the BOJ narrative against the U.S. Federal Reserve. We do have the CPI report also due on Friday, just before the BOJ decision as well. More evidence, perhaps, the rising pay is going to fuel faster inflation. So really a lot to watch out for, including, of course, out of China. You're seeing the offshore yuan not doing much, but we do have those loan prime rates, not to mention the one-year medium-term lending rate being decided on Friday as well.
Yeah, and that China weakness, Shery, on the back of even more disappointing data that we saw over the weekend is really kind of seeing why we're seeing this bifurcated market here in Australia. As we spoke about earlier, unsurprisingly, you're seeing that weakness when it comes to miners and some of the sort of commodities. But interestingly, we're seeing the broader market heading for that fresh record, a lot of leadership from financial and real estate shares, and really quite of interesting that that we're seeing this huge pressure in the recovery rally that we've seen in iron ore miners in particular, and lithium gains as well. The gauge for miners setting the best week since July 2023, but that China story continuing to play out there. We're also seeing some weakness when it comes to trading in New Zealand on the back of some economic data disappointing. That's it for the Asia trade. The China show continues.